Global markets are facing a new wave of uncertainty. The US dollar is climbing again, while the Japanese yen has dropped to its weakest level in nearly 2 years. And investors are beginning to price in a much more dangerous economic scenario: a prolonged war in the Middle East combined with rising energy prices. Ray Watterson here. Let's break down what's moving the markets today. As the war involving Iran moves closer to the 2-week mark, financial markets are increasingly preparing for the possibility of a long and destabilizing conflict. Oil prices are hovering near $100 per barrel, raising fears of another global inflation shock. In response, investors are moving into defensive assets and pulling money out of riskier markets. Stocks and government bonds have both come under pressure in recent sessions, while the US dollar continues to strengthen. The dollar has now climbed to its highest level in more than 3 months. The reason is simple. During times of global uncertainty, investors tend to move toward assets perceived as stable and liquid. And in the current market environment, the US dollar remains the dominant safe haven. The euro has fallen to its lowest level since November, while the British pound has also weakened against the dollar. But the biggest move in the currency market has been the Japanese yen. The yen recently dropped to around 159 per dollar, its weakest level in roughly 20 months. Meanwhile, tensions in the Middle East are continuing to escalate. Iran has reportedly increased attacks on oil and transportation infrastructure across the region. At the same time, Iran's new supreme leader has vowed to keep the Strait of Hormuz closed to shipping. That narrow waterway is one of the most critical oil routes in the world. A large portion of global oil supply passes through it every single day. Any prolonged disruption there could have serious consequences for global energy markets. In response to the rising supply risks, international policymakers have begun taking emergency measures. The International Energy Agency has agreed to release a record amount of oil from strategic reserves. And the United States has temporarily allowed the sale of certain Russian petroleum products that were previously restricted under sanctions. The goal is to stabilize global supply and prevent a dramatic spike in oil prices. But investors remain cautious. Many analysts warn that rising energy costs combined with slowing economic growth could create a stagflation scenario. That is when inflation remains high while economic growth weakens. Next week, attention will shift towards several major central bank meetings in the United States, Europe, and Japan. Investors are watching closely to see how policymakers respond to the possibility of another energy-driven inflation shock. Right now, markets are sending a clear message. Geopolitical risk is rising, energy markets are tightening, and currency markets are adjusting rapidly. Until there is more clarity around the conflict in the Middle East, volatility is likely to remain a dominant theme across global markets. I'm Ray Watterson, and that's what's moving the markets today. Stay sharp, stay informed, and I'll see you in the next update.